Here's something, folks. My next guest says that Americans had to become market speculators because this is what happens as the U.S. dollar continues to lose value. Joining me now, Pomp Investments investor Anthony Pompliano. Anthony, you included a chart in this as well to sort of illustrate, some of the things that are happening here. We have the U.S. listed companies. This is another factor, right? Going from over 8,000 to just a little bit more than 4,000. The whole thing seems to be conspired to make us funnel our money into these markets. Otherwise, I mean, how do you keep up with anything?
I don't know if it's a conspiracy. I don't know if people are that smart, but definitely what's happened is there's a structural issue in America. If you look at the debt, I mean, just in the early 2000s, we were still running a surplus in this country. Now we're running multi-trillion-dollar debts. The total national debt's over $33 trillion. And so if you have this overhang of debt, you've got to go and you've got to devalue the currency. So as they've done that, we've seen this income inequality drastically explode. And so now you have 50% of Americans that are winning who are holding stocks, 50% of Americans that are not holding stocks are losing. And so what we've seen is since about late 1980s and 1990 till today, we went from 30% of US households that held stocks to almost 60%. So we've doubled in the last 30 something years. And so what that tells you is that people are waking up. They're realizing if I simply hold savings, it is going to get devalued away. I have to go into the market. And so doubling from 30% to 60% of US households now hold US stocks. And so all that tells you is that people are getting smarter, television, internet, et cetera, educating them. And I think that it's only going to continue.
So here's the thing that I do find interesting, though, with that whole notion, like, to have this much debt because Japan was ahead of us, right? And I remember when everyone thought Japan was going to be the number one economy in the world, that was back in the day. They were buying everything up, and all of a sudden they've imploded, and they've never really been able to get back their footing. It seems like, okay, maybe this is a good deal for investors, but for the nation, it feels like we can't go back. No one has the willpower in Congress to go back to say, I'm going to cut spending. So it feels like the nation's fate could be sort of sealed. I don't know what would replace us. Maybe that's the only thing saving us right now.
Well, we control the global reserve currency. So that's a huge, benefit and kind of tailwind for us. Right. But I don't see us balancing a budget anytime soon. I don't see us paying back the debt anytime soon. And so definitely it looks like America's future is going to be based on taking on more and more debt. Now, what that means is, as an individual, whether you like it or not, you can't change that, right? There's no one individual who's going to be able to change politics or Congress or any of that stuff. So what you have to start thinking about is, with your portfolio, what are you going to do?
Right.
And what we've seen is that, again, inflation and debt equals returns in stocks, bonds, commodities, Bitcoin, cryptocurrencies, et cetera. And so I think you're going to have an entire generation of people who are growing up in a more financialized world, and they're going to plow all of this capital into financial markets.
Speaking of which, you say that we're right now on the cusp of the biggest marketing blitz in financial market history. And a lot of that's revolving around Bitcoin.
Think about $50 billion or so coming into these ETFs that are going to get approved at some point here in the future. If you look at the fee schedule, that's somewhere between $500 million and $1 billion of annual revenue that's up for grabs. And it's not just for 1 year. That's every single year for perpetuity.
Right.
How much would you spend if I said that there was $500 million that was up for grabs? 100 million, 200 million, 300 million? I don't know what the answer is, but we're about to find out what these firms are going to do.
I'm digging the one with the most interesting man in the world.
Bitwise.
That's a good one.
Yeah, that's a great one.
It's going to be hard to have one up on that. I mean, I think that's a really good one.
Listen, when you put BlackRock, Fidelity, Bitwise, and many other of these issuers together, not only are you going to have a lot of money spent, you're going to have a lot of creativity come into the market. And so what we're really going to watch here is, in some way, Wall Street is about to go and market Bitcoin and cryptocurrencies to the nation. And that's only going to lead to more capital.
I got less than a minute to go, maybe 30 seconds, but I was always a little leery. I know on one hand, obviously, these names, they control everything, right? They are the titans of the world. But on the other hand, I always feel like when they get involved, something goes wrong for the average investor out there. Maybe Bitcoin doesn't get derailed, but are you comfortable now with these big names coming into this space?
I think it's just inevitable. If you want mass adoption, you're going to have to get these large organizations to go ahead and adopt it. And as that occurs, you just have to remember there's a trade-off. And so, yes, there will be some blunting of some of the other aspects of Bitcoin or cryptocurrencies. And we can't change it. So just be prepared, get educated, and make sure that you understand what the market structure is going to be over the next coming years.
I love your attitude. Listen, you can't change it, so make the most of it. In this case, make some money. Pomp, have a great Christmas.
Thank you so much for having me.
All right.